What's going on, GMG man? I was uh, I was watching the old Strat video that we had a couple days ago that I got up in the Discord, and I was thinking that I should remake that because that video is not too good. So here we are right now, basically trying to give you guys a better version of what is the Strat and basically how I trade the Strat, what I do when trading the Strat. All right, so if it sounds like something you want to stick around and watch, man, let's get it. All right. So the first thing that I want to talk about is, well, the first thing we need to talk about when we're talking about what is the Strat, right, is the three types of candle types, right? So the three candle types. Uh, so it's really easy. It's 1, 2, and 3. You have three types of candles. They're numbered 1, 2, and 3. So you have an inside one. That is when the candle. So like you see this green one right here. The high of this candle did not go higher than the previous, so it didn't break the previous high, and then the low of this candle did not break the low of the previous candle, right? So basically this inside one fits, right? This one fits inside of that too, so you have an inside one. A two candle is when only one side of the current candle, right, the candle you're looking at, that only one side of it broke, right, whether it be up or down. So like, to just better explain that, honestly, I know it doesn't, to show you, you see this one right here, right? When this let's say we were watching this one and then this red candle opened and it was a one, right, and we were watching it live. The minute that that candle crossed below this red line, right, the low point of the candle before it, as soon as it crossed below it, it became a two. And this is you might hear in some like Strat terminology, like you'd hear some people say like two down or two up. That's all they mean, right? This is a two down, right? It's a two that cross going down. This right here is a two that cross going up. This one right here cross going down, but then it came back up. So this is a two down still, but it's green. But anyways, yeah. So that's your two. It crosses above or below the previous, not both. And then a three candle, it does both, right? So you have this big red three. It took out the high of the previous candle and it also took out the low. So now it's a big three. So those are the three types of candles. Now, with those three types of candles, this is basically what the dude, whoever came up with the strat, let me take a sip of this powder. Alright. So the guy that came up with the strat, basically, I'm guessing he just of years of perfecting this strategy. He basically he got it. I mean, he said there's only three things a candle can do, right? It's either when it opens, it's either gonna go above the previous and keep going, or it's gonna go below the previous and keep going, or it's gonna do both and be iffy. But over the years, he just developed a set of combos that, just basically, I guess, it was just common things, right? Things that happen so often and whatnot, that he just studied it so well and created combos using these numbers, right? And that's how we have our entries, exits, and all that stuff, right? So that's the next thing we're gonna get into, is what are some of the combos when using the strat. So one of the easiest ones, at least for me, is like the 2-1-2. So you see right here, excuse me. You see right here we have a 2, right? Big green 2, and then we have a 1. When you have this one close and this one opens, right? This will open a 1, and all we're waiting for is a cross up or down. And basically, when this crossed above, right, when we saw it just about to cross above that, we would be ready to get our calls. We'd be ready to go long. And then as soon as we do go long, price target is the first wick to the left. So in this combo, the 2-1-2 combo, since we're just watching these three, entry, price target is the top of the first two. Simple as that. Your stop loss would be the opposite of your entry, right? So since this was a 2 going up, my stop loss for this play would have been this bottom red line. If this was a 2 going down and we got in on puts going down, my stop loss would have been the top red line. All right, so we get in this call, boom, price target 1 is hit. If you had more than one contract, right, here's where you would sell at least one, lock in some profits. Price target 2, you just move over to the left. You see this one right here is very close to price target 1. It's like $1 off. So usually I'll skip something like that and just go to the next one. And this one right here gives us a little more movement, which we did end up taking that one out. And so on and so forth. Move left again. And then give me 1 second. My daughter needs to hold up. What's up, baby? Yeah. Bring me here. Take that one right there. She really came and took the rest of my pop. So, but anyways, yeah. So, what was I? Oh yeah, get it right here. Price target 1, price target 2, price target 3, and if you're still holding, price target 4 all the way up here. You know what I mean? But there you go. So that's how we play the first combo, and you play that up or down. So if all right, that got rid of all my drawings, everything I had. I had specific highlighted areas I'd show you guys, but it doesn't matter. We could play it going down. You see right here, we have a 2, 1, 2 going down. So same thing. Right, we got the 1. We're watching. This 2 goes down. It breaks going down. Price target 1 is the bottom of this 2 now, right? Since we're going down. Boom. You know what I'm saying? Price target's going down. Same way. Alright. Alright. So that's yeah, so that's the 2-1-2. So that one's actually it's probably the easiest one, I'd say. I end up playing that one a lot. 2-1-2 is it's really easy to play. You get an inside one and you wait for the next one to, you know, break the high or the low, and then price target's right there at the wicks. So that's your 2-1-2. Then you have like 3-1-2s, where it's the same thing except it's a 3 in front of the 1, right? So you get like a big 3 followed by a small 1, right? It's like right here. Right here. Look at this. So you have this 3, then you have this 1, right? So you wait for this 1 to break, whether it's up or down. I'll actually make this a little bigger for you guys. So right there, 3, 1, you wait for this to break going up, you get your calls. Price target 1 is right here. Price target 2 is up there, pretty close, pretty much the same. Price target 3, price target 4, and so on and so forth. But this one actually just ran, and you know, you probably leave a runner, take all your profits, leave one contract with like a stop loss somewhere like maybe break even or even a little above break even, and then you just let them runners run, and you would have printed on that one. All right, so that's 3-1-2s. So again, same thing, up or down. If this would have broke down, you would have just got puts, and then all the wicks right here would have been your price targets going down. So that's a 3-1-2. We have 2-2 reversals. That's actually another favorite of mine. So 2-1-2s and 2-2 reversals. I really like those. So like a 2-2 reversal is when you get a 2 going down, immediately followed by a 2 going up, right? So like let's see if like right here, or here's the opposite, right? You got a 2 going up, we get this 2 going up, and then this one right here becomes a 2 going down, right? And then so the minute this breaks going down, hold on, I almost heard my daughter right there fall or something. Hi, am I unmuted? Hi, she says she's good, so. This is the 2 going down, right? So we wait for this 2 goes down, we get our puts right here. Price target right there. Next one right here. next one down here, so on and so forth. Just keep going down the line till your price targets are hit. And then set stop losses somewhere to secure profits if you want to just kind of leave it be. What I like to do is sell a few contracts at 30%, at 50%, sell the rest, and then set a stop loss at break even, and then just leave the trade. The rest are gonna print, or I'm gonna stop out at break even, call it a day. All right, so that's our 2-2 reversal. Same way, again, up or down. Right, we have this green right here. This green 2 was a 2 going down. But you see when it broke beneath this 1. Now this is an example of the strat actually cucking you, right? This would have been a loss. So what would have happened right here, at least what I would have done, just straight off looking at this, I would have got a put when this 2 broke going down. And price target, honestly, for me, probably would have been like, see, it hit that, and I guess per the strat, yeah, like that counts. That's a dub. So I mean, I was gonna say like me myself probably would have went a little further down. You know what I'm saying? But per the strat, here's a good, here's your price target. Boom, you hit it. So that's a dub. But sometimes you'll see a 2-2 reversal as it will be like it will cause people to lose. Like a 2-2 reversal, there's gonna be some losers on that end, right? Because what happens is you get that put right here, and then boom, we go back up. Now you got a 2 going up, and your puts, whatever you had, once you cross this top red line, you get stopped out, you're done, and you lost, right? But I guess right here now we did it at price target, so that was not a great example. This one right here, really 3-2-2. Anyways, all right, so those are pretty much it. We have our continuation plays, like if you already have a 2 and then another 2 pops up. So like right here, you have a 2 that goes up. So we have this green 2, right? Let's say you didn't get your calls right here. Let me erase that. So let's say you missed your entry right here. You didn't get calls right here. When this one opened, right, you see how this had a wick, so it means it came back down and then opened right here. When we got back above this, we continued that, right? 2-2 continuation. Another 2 popped up. You can get a call right here, and just kind of continue the, riding that trend where these would have been your price targets, which we ended up hitting and then coming back down and whatnot. But those would have been 2 price targets that you hit in that continuation, just in case you missed the initial entry. So continuations are pretty good too. I try to stay away from them because they can kind of be a little like chasing, right? You missed your entry here. What I like to say is, I missed my entry, I missed the play. Like, that's it. That was my initial entry. The continuation would be it's always a little riskier because you can get in right here thinking, all right, bet we're continuing, and then it just falls. It goes back down or whatever. The initial momentum is gone or what have you, whatever. The continuation, to me, I just don't play it too often, right? But that's how you would play it. It's literally 2 2s going up, and then you get another 2 going up or down. You play the continuation of the trend, all right? Time frame is really important when watching or when trading with the strat. So basically, when I trade, I use 30-minute and 15-minute at the same time. I can't have more than one chart open without actually having an account with these guys. But basically, I have the S&P. I have 3 charts open: 5-minute chart, 15-minute chart, and 30-minute chart. Oh no, that's cap. 5-minute chart, 30-minute chart, 1 hour chart. All right. I use the 1 hour chart for plays sometimes, and basically the reason that is and before I even get to that, I mainly use the 30-minute. So that's why we're gonna get into why sometimes I use the 1 hour. There's a rule when you're trading with the strat. I don't know if it's a universal rule. There was a guy that I was following in another group that I was in. Went by the name of Big Boy, man. He put me onto the trading with the strat, and he was the one that kind of had this rule. So I don't know if it was his rule, if it was just a universal rule, but I like it, so I'll let you guys know right now. If the hour or the time frame above yours, the one that you're attempting to trade on, right? So I'm always using the 30-minute. Sorry. So I'm always using the 30-minute. If the 1 hour chart, if the current candle for the 1 hour chart is a inside one, I will not get any trades based on whatever happens on the 30-minute chart anymore. I will be waiting to wait for that one to either turn into a two, right? Pick a direction. So either go two down or two up, and then I'll get a call or a put. And maybe not even then, because I don't get plays right off of a three, right? Wait, no, well, yeah. Right, that's true. Well, we didn't even establish what was before the one, right? But it don't matter. If it's an inside one, when it turns into a two, it picked a direction, and then now we could, depending on what was going on before, go long or go short. But until that one is not a one, right? Until it turns into a two, or it closes a one, and then the candle right after it, right? So now we have a blank one, whatever. So let's say, for example, we have a 2, and then now we're watching that hourly chart as a 1. So we have a 2, 1, and then that closes a 1, and the next candle opens and it goes 2 up. That's when I get the call, right? I mean, I probably really sounded really confusing there, but to sum it up, if you're trading on a 30-minute chart and you're about to get a call because you're thinking, okay, this 3, or let's say 2 1 2 right here, right? So let's say you're looking at this and you're like, well, this 2 just crossed going up. Go check the hourly real quick. This is why I have the hourly up already, so I could just peek over and look. If the hourly is a inside one, even though you just saw this turn into a 2 on the 30-minute, and you buy this call, the chances of a pullback and you getting stopped out and things being choppy, they're pretty high, because that inside one on the hourly, there is no direction right now on that hourly chart. And since the hourly chart is bigger and it's kind of just more, it dictates more, right? So basically, if the time frame above the one you're about to use is a 1, don't trade, right? So for me, I trade on the 30. If the 1 hour chart is an inside one, I wait for that to make my next play, for that one to change. All right. So 30-minute is my main go-to for entries and exits, and price targets, everything. 30-minute. When the 30-minute combos present themselves, I just make sure that the inside one, or not the inside, I just make sure that the hourly one is not an inside one, right? If the hourly one candle is a 2 going up, and I want to get a call based on the 30-minute because I just saw a 2 going up, that confirms, okay, we're good to go. I'm about to get my call. And then also I'll peek over at the 5-minute chart, make sure that our uptrend or whatever's going on the 5-minute chart, doesn't suggest that we're about to, drop and die, and then that I should not get calls. So that's basically it for the time frames that I use. So hourly, 30-minute, and 15-minute, right? Those are the 3 that I use the most. Pretty much only use. If the hourly is an inside one, or if the hourly breaks going up, and I know that the daily is an inside one, I probably just won't be trading. Like I kind of established that off rip though. Like at the beginning of the day, if I know the daily inside one, I put just 2 levels for that day. The levels we need to see break so that inside one is not an inside one anymore. That's it, and then I'll trade. But those are the 3 that I use: 1 hour, 30-minute, 5-minute. All right. Time frame continuity kind of ties in with that. Time frame continuity is just making sure that all the major time frames are on the same page. So basically, you see right here on the 30-minute, or actually the major time frame. So we're talking monthly, weekly, daily, 4-hour, and we'll leave one. So just these 4 right here: 4-hour, day, week, month. So if you go to the monthly, you'll see that it's an inside one right now. So with the monthly being an inside one, we kind of, I mean, we're on our way down with this big three, and we know that at SPY and the ES and them, you know, we know they've been bearish for a while. We know that they're bearish right now, and they're in a downtrend, and that we've been hurting for a while. So that we already know. Then we go to the weekly, and we see a 2 going up, or this is a 2 going down actually, but it kind of reversing as green. But it is still a 2 going down that hasn't reached its price target, right? We had this 2 continuation go down, and really price target's down here. We haven't got down there yet, and that is still a possibility, right? Because the stop loss for this play would be up here. So for this to be invalid, right, for us to say, well, nah, there's not a chance we come back down here, we have to cross this, because this can just be a pullback from this initial drop right here, right? Let's say we cross this down and you were going to get puts, and then you see this and you're like, it's a good thing I didn't get puts. I mean, it could have been a lot of people seeing this and going, oh shit, let me get rid of all the calls I had, because we just probably gonna, you know what I'm saying? It could be anything, but the play is not invalidated, right? These puts that you would have got right here, just keep holding them, right? Because we're still in that if you did, anyways. But we see that this is a 2 down, that's a little green right now, and then we drop to the daily. We take a look at the daily. Daily's looking bearish as well, right? We have this downtrend, but we have this 2 going up, big 2 going up. And then on the 4 hour, we have 2 2s going up, right? So at the moment, right now, if I was looking to play calls based on, let's say, 30-minute chart, right? I'm looking at the 30-minute chart, and I see this big 3, and I see a 1, and this 1 cross is going up, turns into a 2, and I want to get calls right here. I know it's a 30-minute chart, and this is a big reason why I like to trade on 30-minute chart. It's in and out. I like to be in and out. So for me, it's in and out, like in 30% gains. You know what I'm saying? That could happen real quick depending on the contracts and stuff. So I will get in this. But more conservative traders would sit here and be like, the monthly, you know, you can sit here and say monthly's bearish, weekly's bearish, daily's bearish, or daily's bullish. So these 2 are bearish, these 2 are bullish. It's a 50-50, I guess. You know what I mean? Like, I don't use time frame like I don't typically like, I'm not gonna go in here and say, well, these 3 are bullish and this 1 is bearish. So basically I can't play any calls today, cause I'm sorry, if 3 are bullish and only 1 is bearish, that doesn't mean I'm not gonna play puts. You know, if I see a 2-2 going down or something, even if I can try to get in for a quick scalp, I might play puts, right? But anyways, because I can't just end up rambling too much. But for time frame continuity, that's basically what it is, all right? I do in the morning look at that, at least just glance at it before your trading day. Look at them weekly, monthly, daily, 4 hour. Just look at these 4 right here, and get a picture of what every time frame is showing you, at least those 4 major ones. And then I go into the 30-minute, 5-minute, and hour to do my intraday, like my quick in and out trades, with still, you know, keeping in mind I know what the daily looked like. You know, I know that we are in a 2-2 going up on the daily or what have you, and I have my levels written down. So even though I'm watching the 30-minute chart, I can see the dotted line for my daily, you know, like my today's low, like what line do we need to cross to become a 2-2 going down or what have you. So yeah, just kind of it's just make sure that the time frames are essentially on the same page before you or at least to confirm a trade for you. All right, that's essentially what time frame continuity would be. But that's a strat thing, really important to look at those 4. All right, broadening formations. That's a little. I wrote that down to kind of talk a little bit about that, but I myself, I'm not even too brushed up on that. But I will give you a little something on broadening formations. When you get a 3, oh, all right. When you get a 3, you get I'm not gonna be able to use that movement right there though. Alright, this might work. Oh, I can't use that. Maybe this, right? You get a 3, right? You can do like kind of like this. Oh, that's not what I meant. Oh, get rid of that. All right, and then your broadening formation right here from this 3. And then when you got this 2, it essentially what you'd be watching right here is for this 2 to hit that. It created your trend. When this next 2 could have hit that and then drop, and then we expect it to come try to hit this one, and then you see how it just gets broader and broader. But this one, like, it went right over. All right, I don't use broadening formation much. Actually, I don't remember the last time I used it, so no, I don't use it much. So actually, it's, to me, not huge. All right, but that pretty much nails everything of what the strat is. All right, a quick little recap: we have 3 candle types. We have an inside 1. We have 2s, which are going up or going down, and then we have 3s, which take the previous high and previous low. All right, so those are the 3 types of candles. With those 3 types of candles, we have combos: 3-1-2s, 3-2-2 reversals, 2-2 reversals, 2-2 continuations. Essentially, what you want. Let's see. What I recommend, right? I'll pull up my Discord right here. See right here. This is the strat combo sheet. I recommend memorizing this. Right, makes life or makes trading the strat a whole lot easier. It shows you the exact play, right? The 2-1-2 is right here. There's your entry. There's your target. There's the 2-1-2 bearish reversal, right? Where we get a reversal, right? You got a big green 2, a 1, and then a red 2 pops up. So now we play the reversal. 2-1-2 going down. So memorize this. This would help you with the trading. All right, and then yeah. All right. So memorize the combos, and then you'll be able to just see them happening, like without even these numbers being there. You'll just know, like, oh, we had a 2-2 reversal just happened. You know what I mean? And it'll just come naturally to you. But the 3 candle types, there's your combo sheet. So that there goes your combos. Always make sure that your time frames add up. Make sure that they're on the same page. I do that in the morning with the major time frames, and then even when I'm in like intraday trading, when I'm watching my 1 hour chart, and I see that the 1 hour is about to break up, and let's say it does break up and give me an entry. Before I actually let you guys go, I do want you guys to know that what I've learned: do not just have that line break and instantly get the call. Like, always, don't always do that. I mean, it works sometimes. So what I mean by that is, let's say you were watching a inside 1, like right here. All right. Let's say we're watching this one right here, and then 2-1. Like, here's an example of a loss, actually, right there. It looks like turned into a 3, right? So either way, this one, you would have got a put going down right here, or calls going up. And if you got, I guess, puts, okay. Well, we don't even want to dive too deep into that. But anyways, if this 2 broke right here, let's watch these 2 right here. This red 2 and this green 2. When this 2 crossed this going up, the millisecond that cross is going up, be careful pressing buy right there, right? I have learned, right, if I'm watching the hourly chart and I saw that cross, I'm gonna go look at the 5-minute chart real quick. I'm gonna go make sure that confirms we're still kind of bullish or bearish, whatever way I'm trying to play. I need to see the 5-minute chart. I need to see strength. I need to see volume. And I watch other things. Okay, this video was really just on the strat, but I got other things that I watch too, like DOM. I'm watching level 2 on my charts. I'm watching who's buying, who's selling, and at what price and stuff like that. So be very careful of just this line being crossed being your golden, like your go-to up, getting calls, you know what I mean? Because yes, that is your signal game, but just make sure everything else, is kind of agrees with that, right? So and again, that will come with experience and stuff too. You just have to get in there. This strat isn't foolproof. It doesn't always work. All right, I've been burnt using the strat, right? It doesn't work. No plan is foolproof. So this will lose sometimes. But if you are watching this and you're watching 4 other things, right? And all 5 things combined are giving you bullish signs, and you go bullish and then it loses. Oh well, the trade didn't work, but I mean, you had every signal in the world to you to tell you to go long, and you did, and it didn't work. That's how it is. That's how trading works. Move on. All right. But again, video's 30 minutes long already. All right. So I'm gonna cut it here. That's everything. At least what I feel you need to know when it comes to using the strat and trading the strat. It's everything that I use when trading the strat. If I didn't talk about it here, I probably don't know much about it or don't know anything about it when it comes to the strat, right? So if somebody was to say, look, man, I didn't hear you talk about this, and yeah, I probably don't use that. I probably didn't know about it, and I don't use it. But everything I talked about here is everything I use, and everything that I like watch for and whatnot, right? So I'll let you guys go with that. I am gonna be making a video later, probably later today, or I'll make it some other time this week or something. But that video is kind of gonna go over how I personally trade, going over the percentages that I like to take profits at, percentages I move my stop losses to, and all that good stuff, right? So just kind of maybe give you guys an idea of what are some good numbers or something. I mean, it's all up to you, but I like to just make little videos like that, maybe just help you guys, give you an idea, because when I needed answers for this stuff, it was really hard to find it. All right. So with that being said, man, y'all have a good one. Peace.